Hello ladies and gentlemen, welcome back to a new video. Today we are going to analyze together or to learn how to use a very important skill set that you need to use in your overall market analysis. And it's, as the video title already suggested it is called the market structure analysis, and it is a very powerful tool which you really need to learn how to use it, because it will help you to identify a market trend, and especially gives you hints where the best entry point is for you as a trader. Now let's go above to the 4-hour chart, because it gives us a better chart to analyze with the market structure. But before that, I want to give briefly an introduction to price action. As you know or should know, price action is something that we can identify with those typical movements where we have those highs, lows, and highs and lows, or as we should call them, higher high, higher low, higher high, and higher low, and yeah, it repeats in general. And this we can also identify, for instance, here. Yeah, and as a beginner, it's quite difficult to identify them, because sometimes, you know, it's, if we look at the chart, it's quite a mess, because as a beginner you would do it something like this. Sorry, let's do that again. You would do it somehow like this. Also count this one, which is wouldn't be wrong, and then continue. But when those candlesticks are already formed, we don't count, for instance, this one, because as before mentioned, we need to have a price action that looks like this, which is the swing high and swing lows. Those need to be, you know, separated from each another. It's like important. And you will see when I show you the market structure analysis, it will make totally sense to you. And if it doesn't, don't worry, I will put maybe a couple of more videos so that you really understand it, how to use it. Now we have identified this trend here. Now what we want to do is just identify all the market structure that is formed here. Now let's quickly see if we see something. For instance, here we have a valid market structure. It break out of this price level here, but it came back and then retested it here like multiple times, and then he continued his journey. Of course, you could put it also this way. Should not be really precise, because you can't do that really precisely. So you can even see here another retest the market of the market structure, and then it continues. And then we have here this, if you can remember what I drawn before, we have those typical price action. There are always those swings, and for instance, we have here one. It's a swing high, and this gives us a hint. Okay, it came back, it tested it. Okay, this is a valid market structure previously, but the next one is a little bit more upwards here. For instance, you can also look on the left side and see if it makes sense. Yes, it makes totally sense. You have like here this market, or yeah, market structure is tested, and here also like twice, and this is the third time. And now he broke out of this structure, and what did he do? He retested it here again. So that gives us like a signal that this is a valid trend continuation, and we can build our strategy, or at least our entry plan, on this trend. And remember, the trend is always your friend, unless you don't see that here is a trend, and obviously you can't really trade them. But for, let's say, every or the most strategy, they need a really good trend, or at least a valid trend, so that you can make money on the markets. And here we have a valid entry point. And if you go to the next one, it continues up, and you can see here the market gave us here like a footprint. You can put here the market structure, see on the left if it makes more or less sense. Yes, we have here a lot of shadows, makes sense. We can put it in like a puzzle. And he retested this market structure. You can see even here a bullish hammer, which gives us the signal to enter this trade. And yeah, you enter this trade and you will be like already with, I mean, in the past he made like 65 pips with an upwards trend. Let's go to the 1 hour and check that in detail. We can see he made here a test, went up, and then he retested it again. So for everybody who missed this trade, has still here the chance to enter this trade. Yeah, that will be like a pretty good trade. Let's make here a quick analysis. We put here, well, let's say 50 and go here up with 50. I think this is actually a good trade. You can see here that you can enter it here or here, and you will be like able to get a nice profit, at least a 1-to-1, well, almost a 1-to-1 risk to reward ratio. And for beginners, it's like really the best to try this market structure analysis on the 4-hour time frame. It's very easy, and to make it simple for you to you know, analyze the market structure, just remember the price action. It makes always the same movements. It's like higher high, higher low, higher high, and a higher low, and it makes always those movements because it's like the natural way how it moves. And if you go here, for instance, we have again a market structure. It forms here the typical price action, which we can use to our advantage. And you know, just put all those relevant market structures. We can see he retested it, was unable to break it, but he broke the market structure, came back. This will be, well, you could say it's also a market structure, but you need to train your eye so that you can really identify better the market structure, or you can go more to the detail to the 1 hour chart. Let's go back. And then you can see a little bit more and say, okay, does that make sense to enter here? Or is that maybe a bad idea? Could be also a bad idea, who knows? Let's put that away. Yeah, I think it's quite difficult to say if this is a breakout and a retest, because they make quite a high you know, movement. I would say this here, if I were back then there, I would identify this and would say, okay, I want to enter here, but then it stopped me out. Then it would have to stop me out here. I'm sure this would be like a bad trade here. Let's say I found this entry or even this one. I was thinking, hey, that's a good trade. Let's go in it. Let's go for it. Would use something like 66 and at least a 1-to-2 risk to reward ratio. Will be like super nice, but unfortunately the markets, they don't obey really the law of natural price action. Sometimes the market makers, they push the price so hard down that you, well, you have no other options than to get stopped out. Otherwise you well, have no other choice. Actually, it is how it is. Sometimes you win a trade, sometimes you lose a trade, but the important thing is just to stick with your winners and survive for another day. Yeah, it works. And if you look, for instance, if you follow your rule of 1-to-3% risk per trade, then you will survive in the long term. And if we continue here, the market structure analysis, you can see here we have also a valid market structure. Oh, a little bit not nice, but that's difficult to say if this is really a valid market structure, or if you were able to identify this as a market structure. It's quite difficult. You might think like, hey, he might come back somewhere here, but he didn't. Sometimes they don't do what they should do, but it's okay. We have like a lot of those opportunities. Or you can just also scroll down and go to the 1 hour and say, hey, this is for me a valid market structure. You can enter here or here and then profit from the upwards movement. And you've been like really profitable here. Yeah, and you can do that with any forex tools. Here we have, for instance, the British pound against the US dollar, and you can do it on the 4-hour time frame or even on the 1 hour, but also on the daily. It's also possible to do it on a daily, but for my personal taste, it's a little bit too slow on the daily. I prefer to do it on the 1 hour or on the 4 hour because you have a lot of really good signals to enter the markets. And there are really people, traders, who only work with market structure and price action and with the trend. Those three components combined together gives you already like an advantage on the market, so that you're able to read, hey, this is a good trading setup. I want to enter the trade, let's say here. Yeah. You can use the risk reward ratio, like, I don't know, like something here, like with 50. And then you want to have like 1 to 2 risk reward ratio, and then you let the trade run. And that would be like a super trade, like 2 days, and then you get filled. Or no, actually, even less. You see, already here you almost hit your target. Sometimes, of course, when you see sticks, candlesticks that have those long wicks, it's like a sign that the bearish pressure is too high, and that you should, especially when you see those 3 shadows here, or even 4, you should really exit the trade and take what is left of your profits. They were like 66 of 100, and let's say this is a $1 at risk trade, that will be like of potential $2,000. You will have like what is that? Dang it, I have to calculate it. It's like more than $1,000 you will be able to get. Actually, I could calculate that for you. You have like 1,000 multiplied by 2 will be 2, and you have like, actually, why am I doing so complicated? It's actually really simple. 6. Wait. Yeah, it's like more than 1,000. Huh. Yeah, it will be like more than $1,000 that we'll be able to get here, which is quite good. It's like at least 1-to-1 risk to reward ratio that you would have catched here, which is actually really good. Or you can also from the beginning say, hey, I don't want to risk losing a trade. I want to have like a lot of good trades. It makes you feel better. It's also mentally an advantage, let's say. And yeah, it is really powerful, this market structure. I would really recommend you to train a little bit, try it out yourself. I will make a couple of other videos where I make more examples how to use the market structure just by putting those square spaces, and it's really powerful. If you know how to read the market with just market structure, price action, and trend lines, you're already way up. I mean, you're already an pro trader, I might call you then, because you can see what the market is doing, and you can also time your entries much better. And if you combine that even with the indicators, you're then really powerful. I mean, you won't be able to screw it up. You will be only able to make a lot of good profits and just a couple of loser trades. But hey, as long you are in profit, everything is fine. And if you look and respect your risk to reward ratio and capital risk, like 1 to 2 or 3% max percentage of what you're risking of your total amount of capital, you will be on the long term just fine. So yeah, I hope this video was more or less useful for you as a introduction to market structure. If you have questions, if you need further more details about market structure analysis, I can give you, I can create more videos. And yeah, I hope you enjoyed it. Give me a like if you liked it. And I hope to see you in the next video. Bye bye.